Now, good day, guys. This is Ref Kenny FX once again. Thank you for subscribing to our YouTube channel. And if you have not subscribed, kindly subscribe to our YouTube channel. So, today we'll be talking about continuation and reversal pattern. Continuation and reversal pattern. But first, I want you to know that before you know all these things, you must be a price action trader. You must be a price action trader. If you're a price action trader, all these things won't be new and will be very straightforward. So these are part of technical analysis, because technical analysis are transitions between rising and falling trends. And you know that a price pattern is a recognizable configuration of price movement. So technical analysis are basically used price patterns to examine the current market movement. And I want you to know that we use trend lines, rectangles and horizontal lines to determine all this with support and resistance. So today we'll be talking about continuation pattern and reversal pattern, as you can see on your screen. And I have told you before, continuation pattern simply means uptrend and a downtrend. And I told you in my previous video, if you have watched, and I said uptrend, when you are in a market uptrend, the market will be making higher lows and higher highs. That's when you are in an uptrend. And when you are in a downtrend, your market will be making lower highs and lower lows. And as you can see, the higher highs are getting higher, while the lower lows are getting lower. That's when you are in a downtrend. Now, what is a continuation pattern? I want you to know that a continuation pattern denotes a temporary interruption of an existing trend. You see that this trend already exists, is already on a uptrend, but you can see when it pull back, it will hit this existing trend, which is our trend line, and continue its continuation. Same thing as this. So now let me quickly put you through how to determine this continuation pattern and how to use it, how to take notes and how to determine this continuation pattern. So you can say continuation pattern can be thought of a pause during a prevailing trend. So when it makes this impulse move, it makes this correction, and you can call it a pause. So now this is a continuation pattern. Now look at it. When a market moves up, it hits this. When a market moves up, it hits this. Now, how do you know this market is a continuation pattern? There are so many things that needs to be considered. Sorry, I want to open something for you. There are so many things that needs to be considered. Like this, you can call it your chart pattern. Like if you have watched my previous video, you would see this already. You see this trend continuation. So we have the flag continuation. You can simply watch the previous videos and you see all these things. So now look at this. Now when the market is going up, it came back, it hits this trend line. You don't just have to enter blindly. You have to wait for either a chart pattern or a candlestick pattern before you follow this continuation. And also this again, you see when the market is on the downtrend, it makes this impulse move and this correction. So what do you have to do? You wait for it to hit the trend line. And note that I told you that you only mark out your trend line when you have at least two lows. Look at here now, we already have at least two lows, 1, 2. You stretch out your trend lines. Look at this now, we have at least two highs here. You stretch out your trend lines. That means when the market hits here, when the market hits somewhere here, you have a trend continuation. So I'm using this to analyze before I go to the original chart to show you. So now let's talk about these reversals. Let's talk about reversal. So what's a reversal pattern? A reversal is a price pattern that signals a change in the prevailing trend of a market. It signals a change in the prevailing trend of a market. For example, Look at this now. In an uptrend, it is supported by an enthusiasm from the bulls and it can pause. So a reversal pattern occurs at the market stops. Look at it. It occurs at the market stop where the trading instrument become more enthusiastically sold than overbought. So when the prices reverses after a pause, the price pattern is known as reversals. Look at this now. You can see that this is different from this. See, you see that when the market is making higher highs and higher lows, here again, this is where the learning comes in. Here again, you don't have to enter blindly. You know, I told you that before you enter here, you either wait for a candlestick pattern to long this market, and wait here, it broke out. So when it broke out here, you wait for a retest. It broke out. The breakout means this market wants to reverse and sell. Before we short this market, you wait for a retest, and this retest, you wait for it to retest the previous higher low. When it retests this previous higher low, this is the retest, so you short it. And this previous higher low, you may short it using candlestick pattern or chart pattern. Same thing here also. Before we long this market, it broke out. You wait for it to retest the previous lower high, and what do? You short it. Now let's go to this. Let's go to this. Let me clean my chart. Let me clean my chart. This is crash 1000. Let me clean my chart. Like I always tell you guys, you analyze your market from the higher time frame. I love analyzing my market from the D1 time frame. Sorry, my network is poor. So now, analyzing your market from the D1 time frame, you can see that this market is a little bit chubby. Like you can see that for days, for months, this market has been on a downtrend. So for you to see this market clearly, you have to come to your weekly time frame. This is how I analyze my market. So I came to the weekly time frame. You can see that this was the previous lower low. This here was the previous lower low. So I had to draw my rectangle here. So when I drew my rectangle, I came to my D1. So this D1, sorry, this D1 here, so this D1 here gave me this D1 here. See, I can see some form of rejection here. So now let me go to my H1 for you, how I analyze this FX market. So now you can see that this market has been selling for some days now. So now it has gotten to a point of reversal. So you can see that this market, when it made lower low here, is making lower low, lower low, lower low, lower low. Let me draw this thing for you so that you see. You can see lower low, lower low, lower low, lower low, lower. So it was unable to make a lower low here again. So it made higher low, higher high, higher low, higher high. So what do I do now? I don't have to enter blindly. So when it made higher low here, look at this trend line. It makes higher low here. This lower low turn to higher low. What do I have to do? I have to enter using this candlestick pattern. This is an hammer, and when I stretch it out, good. So if you see, I gave this signal on my Telegram channel. So I gave it. So now after this market is buying, probably you miss the entry and you want to enter. All you just have to do is to spot this rejection zone. Let me show you. So you will have to spot this rejection zone. Look at this rejection zone. After spotting it, you would see, sorry, when you spot this rejection zone, you would see that here is a major rejection zone. So when the market went up from here, see another rejection zone. So when the market went up from here, it will reverse because this is our support. This is a support, and this trend line also serves as support. So we expect the market to sell up to here, to buy rather up to here, and if it will break out, we would see. Let me quickly show you another trade. So like this is boom 1000, this is boom 1000. As you can see, this boom, let me delete this. As you can see, this boom was already, this bull market was already selling. It was selling for some days now. This is H4. So what do? This is H4. You spot out the previous lower high here, the previous higher low rather. You spot it out. When you spot it out, you know you are waiting to trade a reversal. So this is it. When you go to your H1, you can see that the market was unable to make lower low here again. It was unable to make lower low here. It gave you a higher low, and what do? You long the market for you to be rest assured. So look at it. So this is a simple reversal pattern, and look at this. For a continuation pattern, you know this market is already on uptrend. So for a continuation pattern, that means you can enter this trade when it hit here, when it hit here, when it hit here, and probably when it hit here again. So that is it. Kindly subscribe to my YouTube channel, and you can also send me more answers, and you can join the free Telegram channel. Contact me for more details. Thank you. This is Repeni FX. Love you guys.